All right, so we're gonna go ahead and get started. My name is Joshua, one of you guys' admins here. You guys know me as Sparky, of course. And we also have Dopus Go on the line. He is just unable to speak. So you're actually looking at his screen right now. And I'm just gonna repeat what he says back to you guys so you guys can hear all of it. This is just the market analysis, going over our opinions for next week. And before we do get right into this, I just want to let all of you know that we are still offering the free 30-day trial for our Patreon. It ends tomorrow morning at market open. All right, other than that, we're going to jump right into it, and Caleb's going to be showing us his SPY charting that he has going on. So before looking at SPY, we should look at a couple things going on within the market, he said. There was an ending to a historic of 113 consecutive months of unemployment growth back in March. And he also says that 130 million Americans have sought unemployment benefits in the past 6 weeks. And right, and okay, and guys, I just want to apologize for this. It's kind of slow right now because how we're having to do this, but Caleb is also letting you guys know that there's some stuff going on between the United States and China right now where Trump is trying to punish them with a trade war because of what is going, that he's pretty much blaming them for the coronavirus. So he has chosen to put tariffs and stuff on imports coming in and out of China um, as a way to punish them. So that's definitely going to affect our market and the price of a lot of the products that does come from China. Because, if we increase tariffs, all they do is increase prices. So, okay, and he's comparing Europe to the United States because they did get hit earlier with the coronavirus than we did, and they are expected to go down below 15% by the end of the quarter. And we can kind of use that as like a guide for the future of what's about to happen here because most markets will follow each other pretty closely, the major markets. So we can reflect on what happened there and use it to see what's going to happen here. And we're, based on that, we are expecting it to be a bearish market coming up this week. So if we look at the SPY chart here, we can see that it went and bounced up off the 61.8% retracement level. And then it moved down and touched that 50% level right there on that bottom support line. Okay, so and if you guys remember last week, we mentioned that it was down 1.3%, and we predicted that it would go up and touch this 61.8% level and start to retract. It did take a little bit longer than expected, but it did go up and finally touch that resistance level, and it is now going back down. A couple of things to note here is that if it finds support on that 50% level again, then that would be a good sign that we can actually break the next leg up, which is at 61.8% level. But if it does not, we can expect another heavily red week and lots of quote unquote losses throughout the market. Okay, and then the last thing to look at here is the 100 MA line, which is that yellow one that he has highlighted. We can see that that is a rejection level currently, and that they also got pretty close to touching each other, the price and that 100 MA line, which is why we got that rejection. So there's lots of factors here pointing that it's going to be a very bearish market this week. So if we look down here in a 5-day chart on the SPY, we can see that 100 MA being a rejection point a lot clearer. He's going to pull this up here for us. All right, so you guys can see those red levels are the Fibonacci retracement levels, and it has been consistently pushing down and then consolidating on the level and then pushing down below that level. And it has been consolidating on this level, which we can expect it to go ahead and follow the pattern and break down. And it's also, the RSI is sitting pretty high, close to the overbought level. And since it is touching that 100 MA line, we can expect it to reject that back down as well. Okay, so here's some support and resistance levels. The first resistance level is right here at $288.47. And then the next level would be, which is the support level, by the way, is down here at $279.39. So we can see that if it does manage to get to that support level, that's when we can start to see it rebound back in the upwards direction. All right, and that's everything that he has for SPY. So we're going to go ahead and switch to my screen and talk a little bit more. Okay, can you guys see my screen?
I cannot. It just says cricket noise.
How about now?
Same here.
Nope, not yet.
Okay, you should, I think you have to click on my name and you should see the stream back up. All right, can you guys see everything?
Oh yeah, now I can.
Yeah, I can
Perfect.
see it. What, is there a link in the room? There's a lot of people that are saying they couldn't find a way to join in here.
No, there's no link. It's just this chat. I tagged them all in it, so
Okay.
you should be able to find it.
Okay.
Okay, so we're going to be going over the Dow. So we can see that this is a chart, the same one that we have looked at every time for the past 3 weeks. Nothing on it has changed. We can still see that we had this major drop off and it has been recovering. We have seen a series of higher highs and higher lows. So what we're really wanting to watch for is, if we zoom in a little bit here, we really want this to find a support level on this 50% retracement level. But if we look super close, it has actually dipped down below this and now is rejecting it. So this is another telltale sign of a bearish week, or at least a bearish Monday. And also our MACD here has turned on the bearish side and has opened up. So we're expecting to see a little bit of volatility in the market tomorrow in the downward direction. Hopefully this will find support around the 38.2% level. And then once it gets down here, we can hopefully see it reject or find support and go back up. So that's what we're going to be watching throughout the week, is just the SPY and the Dow closely. They have a overall reflection of the entire market. But now if we look at a couple stocks here, so I know a lot of you are interested in airlines this week, because what Warren Buffett sold, I believe, 10% of all airline companies that he owned. So bring up AAL first. We see that there's not really a lot of anything going on with this stock right now. This is actually the wrong. Okay, right here, American Airlines. So they actually just changed the target price for this stock from $10 down to $1, which is a pretty significant difference.
Wow.
Yeah, they're expected to lose a lot of money, a lot of value within the company. Okay, so let me get on the right screen here where it all looks right. Okay, so if we zoom way down in here, we can see these retracement levels. It's actually down now on the 0% retracement levels that I had previously drawn from this down move. This is where we would want to see it start to reject back in the upward direction. But there has been no signs telling us that it's going to go back up. So I am still expecting this to continue to drop down even lower, probably below $10, below $8. Multiple analysis have this stock at $1, so we can probably see American Airlines turn into a penny stock within the month, would be my estimate on that. And I don't really know if there's a good time to buy into it, because it might just become one of those small companies that doesn't really recover from this kind of thing. Now, of course, there is other major airlines who will be doing okay and won't take that big of a loss, such as United Airlines. Okay, so United Airlines is actually sitting down right now on our support level, like a lot of other things are at opening bell tomorrow. What we're hoping for, but probably won't happen, is this rejection here of the support to continue, and this will hopefully move back up into this resistance of $28.94. Now, if you see this start to make that recovery, it may be a good play to either buy in, sell high, or even make a couple call contracts on this. But if we see this price break this support line and start to leg down, that would be our confirmation to actually go ahead and short this stock or buy a put contract on this guy. Airlines are going to be having a lot of movement tomorrow, especially because how much influence Warren Buffett does have with what he does. So just keep an eye out on those. If you do play them, expect to take a lot of hits tomorrow. Most of the airlines are probably going to significantly drop. So those are two airlines. Let's see, what was the other one? So cruise lines, I'm sure a lot of you are still playing cruise lines. Now, I expect them to to not recover. They'll probably take longer to recover than a lot of other industries. All right, could we have you mute your mic, whoever just joined in? Thank you. All right. So that's kind of all that we have going on in the market this week. We're watching airlines, watching the two, the Dow and the SPY. I personally am watching AT&T this week, also watching Lyft, and I'm watching Disney. I believe Disneyland is up, back and running, and also their streaming service has become very popular, and it's not slowing down at all. It's gaining more and more users every month, so that is a big source of revenue for the company now. And I believe they are going to be very green this week. Same with Lyft. Lyft has had exceptional gains over competitors in the industry, such as Uber. I believe Lyft is something like 5% more in gains than Uber is, even though Uber operates around the globe and Lyft only operates within the United States. So keeping a close eye on Lyft. Once they manage to make that deal where they are now operating in Europe as well, we can see that Lyft stock gain a lot of value. So those are my three stocks this week: Disney, Lyft, and AT&T. So now we're actually going to just go ahead and look at some news that's going on. If I can find it.
My mic on.
There we go. All right, so the country's reopening this week. As a lot of you know, we're all excited for it, ready to get back to work, go out, go to the beach, do something fun. But it's scaring a lot of big investors and a lot of little investors as well. The fear that is going around is that the markets are going to open back up and people are going to get sick again. The infection rate is going to go back up, and all that work, all that social distancing will have been for nothing. So that's a big concern for a lot of investors coming into this week, and that is why we are expecting to have a bearish market, and if not bearish, then a heavy consolidation this week, just until there's been some time for the country to be open and we can see the effects that it's going to cause. Okay, so just keep that on your mind, that lots of states are reopening and there may be another large spike in cases of COVID-19. Other than that, I'm willing to take any of the questions that you guys might have. Go ahead and go up into the live training chat and ask about those.